Hi everyone, good evening. A very warm welcome once again, and it's always good to connect to Ritesh Jain sir and those who have joined. They very well know that when it comes to macros and or to say global macros, he is one person everybody looks up to, and it's our pleasure to have you once again, sir. And sir is founder at Pine Tree and NRI Zen, and we would be knowing the current developments happening across the globe, and at least those which are more relevant in the sense uh, related to the financial markets across the world. So, Ritesh sir, very warm welcome once again. And the first question to start with is like all the developments happening, be it across US, Japan, China, and Indian equities. What is your current sense on the ongoing developments?
Okay. Uh, Welcome everybody. So what I will do is I will take you through few things which have happened in the last 20 odd days. Because the cluster of all the things which have happened in the last 20 odd days has not happened since April of this year when you saw massive volatility in the market. So let me first start with Fed probability. We were all gung-ho that rates will be cut in December meeting. And the Fed probability of a rate cut was between 80 to 90% as on 29th or 30th of October. As on Friday morning, this probability was down to 30 to 35%. So the volatility which you saw over the last 25 days, market was just discounting that that expectation of rate cuts have come down. Now the more interesting part, Fed is divided into middle. Half of the speakers, half of the voters want to vote for a Fed rate cut. This came during market time on Friday when somebody collated that half of the people want to go for a rate cut. Half of the people, including Jerome Powell, does not want to go for the rate cut. I do not believe, or I do not, recollect in my entire investing career of last 25 years, where Fed has been split down to middle and it can go either ways on a rate cut or no rate cut. And who knows, Jerome Powell will decide the last vote. Otherwise, normally it is unanimous. If it is not unanimous, it is normally 80-90% people agree on something and one or two dissent. But this is split down to the middle. So this is something very, very different happening, which we've never seen before. This is the first thing. Second, US government was in a shutdown. Everybody knows it was one of the longest shutdown. What happens during the shutdown? You continue to take money into your coffers because people have to pay their taxes, but you do not spend money. So over the last 4 months, US Treasury TGA, which is known as cash collections, have gone up from $300 billion to now almost $1 trillion. Implications? People look at it in a completely different way. I would say $700 billion of liquidity has been sucked out from the banking system. And dollar index can go only to 100, 100.5. What if some part of this liquidity starts spending back into the system? How would I correlate to this thing? When I was in fixed income in India during, my time, always in the month of March, you used to get liquidity tightness and the risk assets always came under pressure. But in the month of April, all the risk assets, when the government starts spending, then the risk assets had a bid. So think about it. I come from the liquidity point of view, where if you increase the liquidity in the system, you get a bid in the asset prices. So is it possible that in the month of December, we might get a rate cut and along with that, the Fed spending? I'm just leaving in front of you. I have no views. I'm forming my views at this point of time. The third is UK's Chancellor is supposed to present a budget on 26th of November. Why is it important? Because the previous finance minister of UK has said that UK might have to be referred to IMF for a bailout. And just for your information, UK cannot be bailed out by IMF because UK economy is so large that IMF does not have money. In my view, UK today is run by some of the most incompetent leaders I have ever seen in my life in Western world. And why it is important? 2.5 years back when Les Truss came in, she brought her own finance minister and market did not like the budget. And you know what happened? That UK guilds collapsed and she had to resign. So they do not want to, have the same thing again. So next week we'll come to know whether the market likes that budget or not. It will come out in UK bond deals. If UK bond deals goes up, again, risk on risk of scenario. Then after that, we will talk about Japan. What has happened? We have a new prime minister who wants to start spending money like Shinzo Abe. But the problem is again the bond market. She doesn't want Bank of Japan to raise the rates. So market says, fine. Any fixed income guy will tell you, if the market doesn't want to raise the rates, then market will raise the rates. So you've seen 10-year, 20-year, 30-year, 40-year bond yield continue to move up. A determined central banker can always control the bond yield at the shorter end, 1 or 2 years. But unless they do explicit yield curve control, they cannot control 10, 20, 30-year bond yield. So everything comes out via bond yield. The more interesting part, if the bond yields are rising, it should attract capital into the country. But what is happening in Western world, whether it is UK, France, US, and now Japan, the bond yields are also rising. The currency is also falling. This happens only in third world countries. This does not happen in a developed country. This is market way of saying you are no more the first world country. I will not give you a premium of first world country. On top of that thing, Japan has committed $550 billion for US reconstruct or US reindustrialization. I do not believe that bond market will allow Japan to give this $550 billion to United States. Next, we'll talk about Oregon. What has happened in, that, sorry, I'll talk about the Baltimore Bridge. A bridge collapsed a few months back. That bridge was supposed to be reconstructed within 6 months at the cost of $1.9 billion. Now that bridge will take minimum 2 years at the cost of $5 billion. You all can now just in your mind, whenever you would look at some kind of India news, you will say, we always have cost overruns. Things don't happen on time. Yes, India, right? Because it is not a first world country, but see what is happening in United States in front of you. That they cannot rebuild that bridge. After that, the next thing, what is happening in Oregon, very interesting thing, that Amazon was supposed to get some power from a utility controlled by Berkshire Hathaway. They had contracted for that power in 2021, not recently. Oregon utility, which is controlled by Berkshire Hathaway, cannot give that power. They don't have the power. But you contracted that thing in 2021. So what happens to all those who are contracting for power today? If you recollect for the last 2-3 years, my biggest theme has been electrification. And yesterday Elon Musk said, energy is the new currency. So you can all wave your Nvidia chips, but what good are those chips if there is no electricity? Something interesting happened in one more thing happened in, I think, Virginia, where they had some public service commission, some election, where those people who said, we will bring down your power prices, they won the elections, they were Democrats. So by the time midterm comes, everybody will be talking about power prices in United States. And just for your information, power prices have quadrupled in last 15 years in United States. And the bottom quartile of US citizens are paying 30% of their take-home salary only in electricity-related costs. Next, we'll talk about the move index. April to October was a dream run in global markets, simply because in April, move index, which is the bond volatility, went down from 130 to 65. When the bond volatility comes down, P multiples can expand. In the last 1 week, bond volatility has started moving up again. We are at 84. We are not at 134, but we are at 84. Market has started become very nervous. Something on geopolitics. Ukraine has been given on platter to Russia. US is no more willing to listen to anybody. So anybody wants to know why it is happening, you can read my pinned tweet, which I gave 6 months before President Trump was inaugurated. The empire is now so indebted that it cannot project power across the world. So in my view, US will project the power in North and South America, what is happening in Venezuela. Europe will be open, which is effectively given to Russia. Asia, anybody can fight, but we know it is China. US will not be able to project the power in South Asia, South China Sea. So you have people who are, everybody's looking around the world, US allies, that if Ukraine can be given on platter to Europe, to Russia, what happens to Philippines? What happens to Vietnam? What happens to Japan? They will all have to remilitarize. They will have to spend huge amount of money on their own defense spending. Last, on the gold, something very, very interesting happening. A country known as Kyrgyzstan, nobody can even look at it on map, but it is along one belt, one road, has just opened a gold vault of 1000 tons. That country has only 60 tons of gold. Why should it open 1000 tons of gold vault? Then Hong Kong is opening a gold vault for 2000 tons. Saudi Arabia is opening a vault, gold vault. And I have heard rumors, I'm not having a confirmation, that India is opening a gold vault in Gift City. Now think of it this way, that if you are trading with China, or BRICS countries are trading among each other, and you have a trade surplus with China, and you do not want to take, you want to go outside the US dollar system, but you do not want to use yuan, then you say, okay, net settlement in gold, but you still do not want to keep your gold in China. That's why gold vaults are getting opened across the world. China can actually effectively say to Saudi Arabia, fine, you do not want gold to be kept in my locker in Shanghai Metal Exchange. I'm opening a gold vault in Saudi Arabia, so the net settlement of our gold can happen in Saudi Arabia itself. Think about the new monetary system coming. Over the last 1-2 months, you would have seen the difference between Bitcoin and gold. Anybody who's interested in Bitcoin, I do not understand Bitcoin. Anybody who's interested in Bitcoin, please listen to Charlie Edwards. You can Google him. Something is changing in Bitcoin. So I have always believed that, although there are some people believe that Bitcoin and gold bowl with rise, Bitcoin being the Western world currency, gold being the BRICS currency, but for the time being, gold is winning over Bitcoin. So, yeah, I've covered so many of these things which have happened in the last 20 days. I have to keep eye on a lot of many things, but these were the most important things.
So in reference to the tariff thing, you have tweeted one citing that burning bridges for nothing. So would you like to talk
Yeah.
more about it?
So, US Supreme Court ruling is coming in mid-December, and they already have some kind of inclination that the ruling will go against the tariffs itself, that they are not legal. Now, that doesn't mean that US cannot impose tariff, but it will become much more complex and complicated for them to do a universal tariff thing without going through Congress. They can have, some of the other legal provisions allows them to do it, but they're very harsh provisions of doing that thing. So what you have done over the last 6-9 months, you thought it was a very simple thing. Let's collect tariff. We will reduce the income tax of everybody of up to $100,000 to $150,000 to zero, and we will win the midterm. Let foreigners pay for the tariff. That's exactly what you had. GST in India. You have tariff in US. So they just wanted foreigners to pay for it. And first 6 months they collected also good money. So he in fact on the record to say that I will pay this thing $2,000 to everybody making, out of this tariff money. But if the Supreme Court itself says that it is illegal, the tariffs are illegal, then where does it leave you? You fought with everybody on the planet for these tariffs. And now the tariffs are illegal. If the tariffs are illegal, then that means your deficits will go up. If your deficit will go up, market will reprice some of the assets.
And recently, we have seen the China-Japan thing, the remarks on Taiwan from Japan. So,
Hmm.
do we need to read anything between? I
No,
mean,
no, she's a new prime minister. In my view, I think she misspoke. There is a treaty where Japan has a, legal binding to help one of their allies if there is somebody, there is a conflict. And in that, only US is the only country which fits the bill. Taiwan does not fit the bill. So that nothing will happen. I'm pretty sure about that thing. That will be that was just, she just misspoke. But Chinese being Chinese, they are taking it very strongly on this thing.
right. So, one question from Subrat is he's asking recent Russian are selling gold to war. How do we need to read this? Is it the reason for recent sellout of gold?
No, the recent sellout of gold was very simple. Every asset, people get into that asset as, momentum builds up. Everybody wants to buy euphoria. Nobody wants to buy when the chips are down. Everybody wants to buy Bitcoin when it breaks $100,000. Everybody wants to buy gold when it's $4,000. It's a human psychology. Look at GVZ. This is a gold volatility index. When the gold volatility is rising, why would you want to buy gold? You want to buy gold when nobody is buying gold. And I'm very happy when the gold went up to those levels. I actually wrote also. When the Panwala starts giving me, gyan, that Ritesh, I'm telling you that gold is going to 5,000, 6,000 or $10,000, then it is over for the time being. Most people never participate in a bull market if they don't understand why the bull market is there in the first place. And you will keep on happening these kind of sell-off. So let me give you some example. Everybody knows or heard about Weimar fiber hyperinflation. There was hundreds of thousands of inflation, percentage of inflation at that point of time. During that time also, during that 5-6 years period, gold actually corrected by 30 to 40%, 5-6 times, but at the end, it was up by almost 100%, 100 times. You, if you do anything leverage, you don't understand why it is there, then this is what happens. And I'm very happy you are seeing either time correction or price correction I expected. I'm very surprised that we are not finding any price correction. Why it is holding above 4,000 is a very big mystery to me. It should have been down to maybe 3,600 or 3,200, but it is not down. I'm very surprised at this level. So that means the time correction is there. We've seen 2-3 months of time correction. I'm waiting for GVZ to come down to below 20, where everybody would have forgotten gold. As it is, the Twitter timeline has got completely clear. Nobody's talking about gold. So I think we are closer to the end of, the correction. I do not know tomorrow, or next month, but if I know the end goal, why do I care about what is the correction for, when is the correction going to be end? Same thing
Right.
happened in silver. Everybody bought silver breakout above $50. At 53, 54, everybody was telling me it will go to $100. And this is what happens. I know of people losing huge amount of money because they leveraged after that. What you are finding now is that leverage position is getting completely clear and there is no more leverage in the system. In fact, there is a chart now that how over the last 1 month, GLD has seen only outflows. GLD is the biggest gold ETF in the world. I will retweet that chart because I've not retweeted it. Somebody has does all the work. Once the inflows stop, outflows have started happening. That means there is no more euphoria in gold now.
Right. So Imperator has two questions. So with the Japan government bond yields ripping to 1.8% on the
Mhm.
stimulus news, have Japanese lifters finally hit the eject button on US treasuries? Is the big repatriation trade actually starting now?
No, actually, it has been doing it for some time. But who knows from behind, from backside, they will be giving them
You got
swap lines. Okay, I'll continue with the answer. So there are enough ways through which, US can postpone this problem. They can give the swap lines to Japan to not to sell the bonds. So there is enough ways through which they can actually make sure that this problem can be postponed into the future. So don't worry about too much. Even if they raise the rates, uh, you know, I would say that yields have gone up so much already what is the impact you've seen till now? You've not seen too much impact till now. So they're managing it, in my view. Yes, who knows, at some point of time they are not able to manage. For the time being, so Prince, should I continue?
Yeah, sir, please,
Yeah,
if
yeah.
you can.
So
Yeah.
let's go back to Japan because there is lot written about Japan. And I've been talking about Japan for last 2, 3 years. Look, they have the biggest capital surplus in the country. The surplus did not stay in Japan. Why? Because their interest rates were zero. Now let me tell you a story about my own timing when I was a fixed income dealer. We used to call shorting JGBs a widowmaker trade. What does that mean? The yields were so low that we used to short the bonds, that bond yields will go up. And the bond yield continue going down for 15 years. So many traders' careers was lost, so much money was lost because bond yields never went up. Bond yields continue going down. And since the bond yields continued going down, Japanese pension fund, Japanese asset management companies, they went to rest of the world in search of yield. So just for example, 5% of Australia's bond market is owned by Japanese investors. So many companies across the world are owned by Japanese investors. Now the bond yields are rising. If the bond yields are rising, then but natural that the money should leave rest of the world and should come back to Japan because the yields are very good. But till now, I am not finding that thing happening because if the money is leaving rest of the world and coming back to Japan, then JPY should appreciate versus the USD. JPY not appreciating against the USD means that the carry trade is still on. The day Japanese bond yields goes up and Japanese yen starts appreciating, that is the day you can say that yes, some kind of carry trade unwinding is going on.
Right. So
Yeah,
some are asking your view on oil and Indian market.
yeah. Oil, I went positive on oil a month back and natural gas. If anybody wants, if you think that AI is the future, then I'm very clear. I never play a theme when everybody is looking at a particular theme. So to give you an example, you will not have 5 LLMs. You will not have 5 models. You will have only one. But 5 of them are spending money to bankruptcy so that one of them can win. But 5 of them will spend on something. So you can have chips of Nvidia, but you do not have electricity. Nuclear will come in another 10 years, but natural gas is available today. So I believe we are starting a natural gas ecosystem, not only natural gas ecosystem, including, for example, turbines, gas turbines, for example, LNG terminals, for example, LNG ships. We are starting that kind of bull market in natural gas equities or the entire ecosystem. On oil, I believe we are closer to the bottom of the oil simply because if US is going in and fighting, wants to take over Venezuela, they know that their shale revolution is coming to an end. There are so many, I have talked to a couple of guys because I am in an oil belt over here that within the next 1 or 2 years, you will start see a sharply declining US production, which was at 13.5 million barrels down to 11 and a half million barrels. Now you will say 2 million barrels. How does it matter? Oil is not, or any asset is not priced on the 100 million barrels of oil demand supply. It is priced on the last remaining 1 million barrel. So I am firmly of the view that the entire oil, NGLs, they are known as NGLs. Thus, the demand for all that thing will go up, and it is very bullish for this entire ecosystem unless obviously your global economy goes into recession and all, which nobody can say, but I'm bullish over there. Now let me take the last question on India. I will start because, and you know, um, if you want to build up your understanding not on company but on macro level, what is happening in India, I strongly suggest you look at some of my tweets or videos of June 2024 or tweets of February 2025. It's not that I could see something which others couldn't. I come from a macro background. Before June 2024, we used to spend a lot of money on capex, which generates return themselves. And after June 2024, when BJP got drubbing in the election for whatever reason, the our expenditure mix shifted from capex more to revenue expenditure or to give subsidies. You would have seen in Maharashtra. Recent is the Ladli Behan Yojana in Bihar. Now, I do not have any political view on that. I have an economics view on that thing. If you start spending money on subsidies, more money on subsidies, it will come out. You have to pay for it. How do you pay for it? You pay for it via currency depreciation because you are not becoming competitive. But falling currency makes you competitive. So that is the easiest way. If you see before 2014-15, our currency used to depreciate. Whenever we've done more of capex, more of operation expenditure, our currency has fallen. And it is true across the world because you're not creating assets. You're just giving free money, which leads to current GDP at the expense of futures GDP. It's like you're putting a drug in your veins and you get a high, but then you get a withdrawal system. Think of any subsidies like that, but it gives you a high at that point of time. What we did after June 2024, our expenditure changed. If our expenditure changed, and FI sitting abroad saw that your markets were overvalued, and he said, RBI is not allowing even currency to depreciate. It's a basic economics. You should have allowed RBI currency to depreciate. So an overvalued market and an overvalued currency, if even I am an FI, even I will press an exit button. We continued with this policy till February 2025. After that, we got a new governor who understood this problem or did not take the currency strength on its ego. From that day onwards, he started slowly giving the currency out. So you have solved one problem of currency. Now there is another problem. When you look at FMCG business or you look at in FMCG or any business, you not only look at volume growth, you look at price growth. If today for example, if Hindustan Lever comes out with a result and shows you 6% volume growth, but only 1% price growth, you will not be happy. Because 5 years back, he used to give you 7% volume growth and 5% price growth. So it was a 12% growth you used to get. Same thing is for economy. India's nominal GDP used to be between 12 to 14% for a very long period of time. Then our nominal GDP collapsed to 10%. Then currently our nominal GDP is down to 8%. Will an analyst covering Hindustan Lever will be happy to see a 7 to 8% nominal volume plus price growth when he was seeing 14%? At 14%, he was nominal at 14% volume plus price growth. He was giving an X valuation to Hindustan Unilever. Do you think that currently at 6% real GDP and 1.5 or 2% of inflation, which is 8%, will you get the same kind of valuation? How can you get the same kind of valuation? For you to get the same kind of value, and that is why you saw a 12 to 15 months of time and price correction in Indian markets. Now the onus is clearly on RBI because currency has now, so all the subsidies which you've given has come out through currency weakness. What you need now is RBI to cut the rates because government does not have enough fiscal space to start spending money. If, in my view, you will have a 50 basis point of rate cut in the next 3 to 6 months, if you will be back to 10% nominal GDP by middle of next year. If you are back to 10% nominal GDP, then I believe that within next, not 6, possibly between next 6 to 12 months, market should be much higher than the current levels. It's a very simple case of nominal GDP because corporate profitability is exactly like nominal GDP.
Right.
I hope I
Small
have not
follow.
complicated
Yeah.
the thing. I have
Yeah.
not complicated the thing for all of you.
Mm,
I
mm.
hope.
Yeah, yeah. So small follow-up on the ongoing question from one of the participant and one question on Canadians, and we wrap up for the day. So he's saying Ritesh sir has predicted Indian market correction and INR devaluation. His call was bang on. My question is, when did we have similar setup last time? What do you expect INR to be, and when can we expect returns of the FIIs?
So, so first question, I am not remembering the time. The return of FI will be there when they believe two things will happen. The currency is now rightly priced. I think we are closer to there. मेरी तो view 88-90 ही थी. Actually उसके beyond थी भी नहीं मेरी view. But who knows? On top of that thing, when they start seeing that RBI has cut the rate, so maybe RBI cuts the rate by 50 basis point, your currency weakens a little bit more, and then you find that yes, you are back to nominal GDP. We need 3 to 4% inflation. Look, a 3 to 4% inflation is not good for you as a salary earner, but a 3 to 4% is a lifeblood for an equity investor. You need 4% inflation for equities to do well. It's as simple as that, because our real GDP cannot rise by 8% anymore. Our real GDP can rise to maximum of 6 to 7%. So we need 4% inflation for equity markets to do well, for FIs to come back.
Thanks. Well, so last question is on the Canadian equities, asking please touch base on Canadian equity. Despite the economy not doing good, markets are performing well. You said
Yes,
Canadian real estate market will be in trouble, and it went same way. And in one of the presentation, you have mentioned that something positive happening for Canadian equity.
yes. So I believe over the next few years, uh, Canadian assets, Canadian equities will do very well, and Canadian real estate will continue to go for a massive time correction. Why I'm saying that thing? It is how the government incentives have been. Government incentives over the last, before this government, have been only to favor real estate over the real industries. But after the new prime minister who's has a, you know, that he has very good understanding of this thing. And Canada is very rich in natural resources. Canada has now understood that it cannot depend upon US anymore. We used to have so many of these projects which got shunned during the previous liberal government, but the current liberal government is opening those kind of projects. And that is why we are going to be moving from money moving from real estate to Canadian equities. But the unfortunate part is Canadians will not be able to participate in the Canadian equity boom, simply because they are leveraged in their home. They do not have disposable income. Foreigners will come and buy Canadian equities, and Canadian equities should continue to do very well over the coming years. I am taking into account that whatever our Prime Minister has said, he will go ahead and do it. Like, it's a great thing that they have maintained, relationship with India is back. I had written about it a year back that for Canada, India is the best partner, and for India also, Canada is the best partner. We are an energy hungry country. Canada has surplus energy. So it's a marriage made in the heaven. And yesterday also, our Prime Minister met, along with Australian Prime Minister, he met Canadian Prime Minister also yesterday. I also believe over the next couple of years, a lot of Indian companies will come and buy out companies in Canada. There will be massive inbound FDI from India into Canada to buy Canadian assets, because America will not allow Russia or China to buy Canadian assets. Russia will not allow any, US will not allow any Russia or China in US background, US, backyard, North America or South America, but it will allow India to buy Canadian assets. So I believe you will see massive improvement in relationship between India and Canada, and India will be doing massive amount of investments in Canada, which is good for Canadian equities.
Although I said last question, so Ritesh, please allow me one more question. So AI bubble is most common term which we
Hmm.
come across, be it X or YouTube or whatever social media platform. So do you buy that thing because people are concerned that AI bubble might burst going forward, and if it would happen, then what would be the repercussions in case you have any view?
AI is for real. There is no doubt in my mind. Bubble is for markets. It's a very simple thing. If you want, or everybody is trying to do exactly the same thing, all these companies have gone from massive cash flows to doing capex. All of them will not be winners. You will have very few winners. But for anybody to win, you need electricity. US does not have electricity. And I must tell you, close out with one thing. Any industry which China has entered, the profit in that industry globally has gone down to zero. I believe China is far ahead of US and AI.
Perfect. Thank you so much, Ritesh sir, for your time. Really insightful all the time, and definitely for our audience who joined late, we'll share the recording on Sir's handle, and as well as I'll also share so that all have access to the insights. Thank you so much for your time, sir.
Thank you. Thank you.
Thanks, everyone.